For the last 4 months, the US stock market has been consistently making new all-time highs. That is up until one of Donald Trump's tweets wiped out $1.7 trillion in the market cap of the S&P 500, threatening a 100% tariff hike on China. A day later, Donald Trump tweeted that everything was fine, and the market rebounded as if nothing happened. This correction might look insignificant, but the damage that is being done here is much greater than what anyone realizes. Because if we zoom out a little bit, we see that although the stock market is at all-time highs in US dollar terms, it's making new lows when measured in terms of gold. In fact, it's hovering around its lowest levels in over 10 years. This divergence between the S&P 500 in dollar terms versus gold terms really began in early 2024. It accelerated during the first tariff announcements at the beginning of 2025, and it's now intensifying even further with the recent announcement. Now, historically, periods where the stock market is declining in gold terms usually coincide with periods where the stock market is also stagnating in dollar terms. This was the case in the early 2000s during the dot-com bust and the 2008 financial crisis. And if we rewind a little bit further, we see the stock market was also declining in gold terms in the 1970s, which was a period of stagnation in US dollar terms as well. That's because most of the time, when there is a lot of capital flowing into gold, it suggests there is a flight to safety, which usually means that there are so much concerns in the market that capital is flowing out of the stock market. Today, that's not what we're seeing. Yes, gold is rising, but so are stocks. In fact, the stock market has completely shrugged off all the risks associated with tariffs. Not just the extremely high trade uncertainty that has resulted, but also the very low consumer sentiment that we've had since the beginning of the year that historically has been associated with economic recessions. But that does not mean that we should ignore the signal that we're getting on the stock market measured in gold. Donald Trump has just threatened a 100% tariff hike on China. Now, although Trump has already backed off from this threat, there is a reason for why it's triggering a panic underneath the surface. A 100% tariff hike would lift the effective tariff rate on Chinese goods coming into the US to around 140%. This is a level that completely shuts down trade, as it essentially makes any business importing goods into the US from China unprofitable. This kind of scenario would be enough to trigger an economic depression. Now, investors know that Trump is extremely unlikely to follow through on this threat and that this is part of a broader negotiation. This is why we're not seeing stocks plummet in a straight line down right now. But what this threat does do is it fragilizes the relationship between China and the US even further and lays the foundation for something like that to actually happen. Keep in mind, China is in a much stronger position to play tough when it comes to trade today. It has already seen its exports to the US drop by 27% since the start of the trade war, but on the flip side, it has seen its non-US exports grow significantly to completely offset the drop in exports to the US. Altogether, Chinese exports have actually grown nicely over the course of the last year by 8%, despite the significant tariff hit from the US. What this represents is a gradual misalignment and growing independence between the US's trade interests and Chinese trade interests. Eventually, if these interests have diverged enough, Trump or another president could be forced one way or another to actually follow through on a policy that would completely sever ties between the US and China. The mere fact that this is on the table represents a clear deterioration in global trade ties that almost certainly will have an impact on economic growth at some point in the future. The reason that the stock market is not reacting to this right now is because corporate profits are at all-time highs right now. And the reason for these high corporate profits is not that tariffs have zero impact. It's because there are other structural forces that are at play that are driving them higher, at least for now. The US government's $2 trillion per year deficit, equivalent to roughly 7% of GDP, is helping keep economic growth resilient. The Federal Reserve is cutting their interest rate, which is lowering borrowing costs for businesses and loosening financial conditions. And finally, corporate profit margins are at all-time highs, which is helping businesses grow their earnings more easily and allowing shareholders to accumulate assets at a fast pace. Now, these forces don't just drive stocks higher, they drive all financial assets higher. This is why gold and Bitcoin, that are not directly tied to economic growth, have been moving higher alongside the stock market. In fact, gold and Bitcoin have both been rising faster than stocks over the last couple of years, which clearly highlights what we are talking about here. Now, we happen to think that these forces will probably continue continue for at least another 6 to 12 months, which will continue to push asset prices higher, probably in the short term as well. Now, on October 9th, we booked profits and closed a good chunk of the positions that we had at Bravos Research. This is because we believed that the risk of a short-term correction in the market was quite high, and so we raised cash to protect ourselves. Now, although sometimes it means missing out on a few percentage point gains, in these situations, risk management can help lock in the profits that we've had over the last few months. And it also gives us dry powder to ramp back up our exposure during this kind of a pullback. So we've already been using this pullback to put the cash that we raised back to work and initiate trades on specific stocks that we think have substantial upside in the coming weeks. If you want to follow each and every trade that we take, we share everything along with our entire strategy, all of our thoughts on the market day by day to our clients at bravosresearch.com. Join the thousands of traders already on there. Thank you for watching.